Dr. Farooq, shall we start? Farooq, shall we start?
Yeah, 1 minute, please.
Sure.
After 1 minute, we will start because like some people are just joining in.
No problem.
Dr. Farooq, you're in portrait mode as well. Maybe you can turn to landscape
Okay,
mode.
perfect. I will do it.
You have a technology guy with Mohammad Nakib. See, he corrected us all. Excellent, good work, Nakib.
Thank you, thank you.
That is always having pleasure of people like you. In webinars, I think who are corrected our mistakes. See,
It's not correction. I mean, it's okay. I mean, just a point. So
it makes a huge difference when some people they are watching us, and later on more, I think 10 times people they are in our videos when we are posting, they are watching us. So it makes a difference that how you have been seen on the screen. Shall we start, Farooq?
Yeah, I think that we can start. So you go first, Asif.
Okay, thanks a lot. Bismillahirrahmanirrahim. Nahmadu Nasrullah Wasulil Kareem. Bismillahirrahmanirrahim. Assalamu alaikum, everyone, and good afternoon from Dubai. This is Saeed Asif Zaman, your host from Alif Technologies. Welcome to our e-learning webinar series. Today, we are going for a very interesting topic, which is decentralized finance, or in a short form, is called DeFi. Decentralized finance, as we have mentioned, this is a movement that leverages the decentralized network was to transform old financial products into trustless and transparent protocol that runs without intermediaries. Today, we have two key speakers, Mr. Nakib and Morgan Dean. And after that, we will be having a panel discussion. And this that over 19 billion market capital within 1 week, this DeFis have taken over. And this interesting, we'll start the webinars. Today's our moderator will be Dr. Farooq Habib. To you, Dr. Farooq.
Okay, thank you so much, Mr. Asif, for giving the introduction. Let me just give you a brief introduction of Alif Technologies and also what these webinars are and why we are conducting them. Alif Technologies is a Dubai-based company focusing on advisory and consultancy for Islamic finance and fintech. And also we focus on educational programs, courses, programs. So we are actually have collaborated with some universities around the world. And we are going to offer some exciting programs as well in the future. Some of them have already been developed. So that is basically the second thing which we are doing. And the third is actually product development itself. So although like we have some software development, in-house software development resources, but we also through our collaborations and partnership offer IT solutions and also specifically blockchain, artificial intelligence, IoT devices solutions as well, and platform development. So that is basically the company, what we are doing. And actually the focus was also initially we started as to offer educational programs, courses, corporate trainings, workshops. So I decided to have me and my partner, Mr. Asif Zaman, decided to have webinars as well, free webinars. And we are very much glad, Alhamdulillah, that we have received overwhelming response from the audience as well for our webinar series. And we are very much thankful to our guest speakers because they always ये क्या हुआ, मैं डिस्कनेक्ट हो गया हूँ. Okay, perfect. And also the thing is, we are conducting these webinars to share knowledge, and we are very much thankful to our speakers that they generously accept our invitation and speak in the webinars. So I think that without further ado, I would like to invite our first guest speaker, Mohammad Naqib. Mohammad Naqib is the CIO of Spherium. And now I think that it has been rebranded as Amana Defi. And also Naqib is actually a global fintech influencer and an ardent advocate of the bright side of a borderless economy. The biggest asset that Naqib brings to any organization is himself. Sitting in the C-suite of blockchain and fintech companies, he effectively plays the role of a catalyst to bring the most innovative solutions for the community. So I think that I would like to basically ask and invite Mr. Naqib to start his presentation. So over to you, Naqib.
Thank you so much, Dr. Farooq, for the great introduction. I love that actually, and I welcome everybody to this knowledge session basically, because we are basically there to share knowledge, to learn, and not basically to give knowledge. So I'll just share my screen from where I think we can. Okay, I think. All right. So basically, our topic for discussion today will revolve around decentralized financial system. So we will basically we will discuss about what the flaws of the current financial system is, and then we will see how the challenger banks are actually trying to solve some of the problems, and then how we are moving towards decentralized finance and what makes decentralized finance different from the current financial system. We will discuss some of the products and some of the projects that have been built on the decentralized finance. And the later part will be obviously taken by my colleague Morgan, where we will deep dive into the concepts of DeFi. So, what are the flaws in the global banking system? Number one is billions of people globally remain unbanked. I mean, we know it very well that people like you and me, who are basically currently sitting in front of a computer and we are seeing each other and we are using the internet, we have a laptop or a smart device in our hand, we are not the ones who are called as unbanked, and we are not the ones who are underprivileged. But there are 2 billion adults undercount, maybe more than that, which have not been counted in the survey, which have zero access to an account within a financial institution or maybe even a mobile money provider. The second challenge is, or the second flaw is, a global financial literacy remains low. So there was a survey by the global FinLit team. FinLit stands for financial literacy. So there is an organization which does this survey time and often for the global financial literacy. So they said that just in 1 in every 3 people show an understanding of the basic financial concepts, which most of the people living in high income economies don't. So even though there are great products that are brought out by the traditional financial system, but there are people, due to the low financial literacy, they are not able to utilize these products that come up for their benefit. So the third challenge is that the high intermediary costs and slow transactions. So basically what this means is that if I'm sitting in Saudi Arabia and trying to transfer funds to my friends across the globe, maybe somebody sitting in Australia, somebody sitting in Zimbabwe, somebody sitting in India. So there is a cost that is there for the transfer, and there is there is a delay in the transfer. So what the statistics says that the average cost of remittance is almost 7.1% in fees per transaction. And when using the banks, that rises to 10.53%. So if you are doing it through the traditional banking system, it goes up to almost 10 to 11%. And even worse, these transactions can take days at a time, which seems quite unnecessary, because we are dependent when doing remittance. We are dependent on the banking timings. We are dependent on weekends. We are dependent on holidays. So during these time, I cannot send my own money to my family who is in need. So we are basically stopped by these banking systems from utilizing our own money. Sorry, we have a low trust in financial institutions and governments. This is the next challenge, that is the next flaw we have. So what the survey says, I mean, what the study says, that globally around 57% trust in business sector. So it's a very less percent, and trust in governments is even lower. If we talk about the US government, so the survey says that only 40% of the economy trusts the US government, and the global country average is less than 50%. It's at 47%. So next challenge is rising global inequality. Vast majority of people have little to no financial assets to even start building wealth. So for example, even if people have access to the banking system, to the financial system, middle class people or lower middle class people cannot invest in big companies. I mean, for example, a person sitting in Bangladesh, who is basically doing a fish business, he cannot invest in Apple, which is basically a company based in the US, and which has the stock. The stocks are even higher. So there is inequality between the people who are who even have access to the financial systems. So we say that, in fact, according to recent survey on global wealth concentration, top 1% own the 47% of all household wealth, and the top 10% hold roughly 80%, 85%. So this is a huge inequality percentage that keeps on increasing every day. And the next flaw is that there is currency manipulation and censorship. Great example is Venezuela. The inflation is hitting all-time high. So in a centralized system, countries have the power to manipulate and devalue fiat currencies. It's a very, I've given the example of Venezuela, where there has been a huge inflation, and people basically have lost their faith in the central bank backed currency that they have in the country. And also the centralized banking systems, they have the power to freeze your assets. For example, there is a riot in a particular city. The government decides to freeze all the accounts of the citizens of that city. So even though if you are not participating in the riot, even if you are not under the wanted list or something, you are just sitting in your home, and you are saving yourself from the civil rights that's going on. Even then, you're not able to access your banking system. I mean, I think we saw this example 2 years back in India, where there were riots in Uttar Pradesh, and the whole state had, the state government had frozen the bank accounts of all the inhabitants of that state. So even though I have my own money, I cannot utilize it for my own benefit, because there is a government level lockdown. So the final challenge is that there is a build-up of systematic risk. So with financial power concentrated with just a select few institutions, for example, the Reserve Bank or the central bank. So if these fail, there is a total failure of the whole financial system of the country. A perfect example is the financial meltdown of 2008, which basically gave rise to the creation and launch of the Bitcoin as we know it. Moving on. So we have challenger banks who have been very popular in the past few months, I mean, in maybe almost a year or so, which have been trying to solve some of these problems of the traditional banking system. So there is this study done by Bernmark, which focuses on the impact that the challenger banks are having on the traditional banking sector. Because after post 2008, there was a loss in the trust that people had towards the banking system, and that was the time. In fact, as I said, Bitcoin was released. It was also mentioned in the white paper about why Bitcoin was released, and then once the financial system started picking up, people started expecting customer-centric services like the big tech are offering, like Google or Facebook. So people started moving towards the technology company to offer financial services. So that's the reason, like, I think Jack Ma, the founder of Alibaba, he coined this term as TechFin. So TechFin basically stands for technology fintech, because we have fintech, and fintech basically stands for financial companies providing technology services, like banks providing ATMs. So ATM is basically a technological service. And then we have TechFin. So technological companies providing financial services. For example, Google is providing Google Pay, Amazon is providing Amazon Pay. So these are all financial services which started being provided by traditional technological companies. So basically, this Bernmark report categorizes challenger banks into three categories: embryonic challenges, real challenges, and pseudo challenges. So it's a very small definition that I have put out, like, for the users to read it on the screen, in fact. So embryonic challenges are fintech innovators on the banking value chain who operate only through mobile apps in partnership with traditional banks or other bigger challenge banks. For example, in India, Paytm is quite popular. So it has its own banking system, it has its own bank, as well as it operates in partnership with the banks in the country. Then you have real challenges, so non-existent banks, almost like neobanks, which have obtained a banking license in the last 3 to 5 years, or in the process of procuring a banking license, and has digital as the only predominant challenge for engaging with customers. So in UK, we have an Islamic neobank as Risk, which is basically almost on the verge of being launched. So it is a digital-only bank. We have Revolut, which has basically taken the entire financial industry by storm. And so these are like some of the neo banking services, which are like real challenger banks. They don't have physical infrastructure; they are completely digital. Then we have pseudo challenges like digital subsidiary digital partners, also neobanks and digital startups of existing banks with engage with customers through both bank branch and digital channels. So basically, if, for example, HSBC comes up with its digital bank, perfect example would be, I think, DCB. DCB has its neo banking solution, which is a complete digital banking offering for the community. So these are basically the three categories of challenger banks that have been categorized by the Bernmark report, as I mentioned in my last slide. So the road to DeFi. So we can see that with the evolution of technology, people are coming up with more innovative solutions to address the flaws of the traditional banking system. So similarly, people after the release of Bitcoin in 2008, the world came to know about the blockchain technology, and then people started building applications on top of blockchain. Bitcoin being a cryptocurrency as well as an application, that was the first application that was built on the blockchain. So what is DeFi, or decentralized finance as we call it? Somebody asked me, you call it Defi or DeFi. So it depends on how you pronounce finance. You pronounce finance as finance or finance. So it's DeFi or Defi. Anyways, so what is DeFi? It's an alternative to traditional banking, which is developed on top of open, public, and trustless networks. So these are some of the public networks I have listed. The first is Bitcoin, we have Algorand, we have Ethereum, we have Cardano, we have Tezos. So these are very popular public networks that is there in the market today. There are many more public networks as well. Like these are the top public networks under my knowledge. I'm still trying to study and understand this ecosystem because it's changing at such a fast pace. And within all of this, Ethereum captures the majority of market share for decentralized financing applications. Almost like around 95% of DeFi applications or projects are built on the Ethereum blockchain. People are also moving onto the Bitcoin blockchain. Algorand and Tezos are coming up with real innovative solutions and product changes to their existing protocol to basically host and invite developers to build DeFi applications on its own blockchain network. So why do we need DeFi and not the traditional banking systems or the challenger banks? Like I have designed my slide in such a way that we actually come up with this answer on our own. So here I have like listed out four reasons why we need DeFi. So challenger banks or CBs are trying to improvise the existing financial services, while DeFi is building a whole new infrastructure from ground up. So DeFi is not is basically focuses on innovation. I mean, all the projects that it has built has been created out of the minds of the developers, which do not coincide with the working of the centralized financial system. The challenger banks still need to tap on the legacy networks between banks, despite some of them being mobile only. It is not necessarily that more open inclusive payments still take a lot of time. So yes, this is a challenge as well. In fact, as I said, the second category of the challenger banks, so they are still dependent on the traditional banking system, although they provide how do I explain? They provide better APIs or better ways to access the banking system, but in the end, the foundation is still the traditional banking system. DeFi represents the first time in human history that we have permissionless innovation in finance on a global scale. So anybody, like people like me or Morgan or Dr. Farooq or anybody who knows coding or who knows how to come up with a great idea on DeFi, they can just build this application and they can launch it on the blockchain. So that's the reason, like in my previous slide, I explained that DeFi is built on public permissionless blockchains, because you don't need anybody's permission to host your offering or your DeFi solution. So through crypto economics, DeFi protocols can share its economics with its users, a powerful incentive to bootstrap a community. So this is a huge way of basically when companies like they are building, like for example, obviously when Morgan will explain more about how we are doing it in Ethereum. So with the power of DeFi, a company can actually build up its whole solution without a penny in its pocket, raise money from its market based on allocations, and self-fund its own development, and then basically create products back for the community. So as I said, like how DeFi has emerged, I mentioned this in my first slide. So basically in 2008 and 9, we had Bitcoin, which was the first application running on the blockchain. So blockchain is basically the underlying technology, and Bitcoin is the application that runs on the blockchain. And similarly, we have other applications that runs on the blockchain. We have financial services, we have healthcare services, we have supply chain and transport. So there are immense innovations that are going on every second as we speak. So these are all applications that are being built on the blockchain. So when we had Bitcoin in 2009, people felt the need of creating smart contracts or basically programmable logic that can handle the transactions on their own. So then Vitalik Buterin proposed the idea of Ethereum, which was basically a smart contract based blockchain in 2015. And when Ethereum was released in 2015, although the development started from 2013 itself, it was officially announced in 2015. So Ethereum gave the power to the global community to create their own applications, or as I say, dApps, decentralized applications on its blockchain. And once people started building applications of blockchain, the first utility that came into was building financial applications, and where MakerDAO, which basically is the first financial application on the Ethereum blockchain, as also we can call it as the first DeFi application. So this was built by MakerDAO, and they built up its own stable currency called DAI. We will discuss it in the further slides. So like this is how the world came into the field, into the ecosystem of DeFi. Okay, so understanding the decentralized finance. So these are some of the DeFi characteristics, which is a reword, or you can say a better language given to the basic properties of a blockchain. So these are the like 5 characteristics that I could think of. Maybe the audience can add more to it. So the first is like it's affordable cross-border payments. I read in the news like around 2 weeks back, there was a transfer of around 3 billion worth of Bitcoins for only $5 transaction fees, which is huge. And I also transferred like around $10,000 worth of Saudi riyals to India, and I paid almost like 15,000 rupees as transaction fees. So that's huge percentage. So when you're transferring $3 billion worth of Bitcoins for only $5 transaction fees, this is nothing. This is negligible. And the next property or the next characteristic is improved privacy and security. So basically, blockchains or the blockchain transactions are pseudonymous. It's not anonymous; it's pseudonymous. So anybody can check the transaction on the blockchain explorer, but you cannot know the person behind the transaction. So basically, you have your own security and you have your own privacy in the transactions. Censorship resistant transactions. So the governments cannot stop you, or your company cannot stop you from transferring your own money to your friend or to your family. We have simple use. I mean, the DeFi projects are very simple to use money because they are based on the money Legos model. So DeFi in very simple terms is also explained as a stack composed of Legos. So basically, it's like a plug and play model. So you choose whatever components you want to use. You want to benefit from in the ecosystem. And obviously, you have a wider access to the financial services. So anybody sitting in any corner of the world, if he has a smart device and an internet, you can participate in any tokenization happening in any corner of the world. For example, a person sitting in Atlanta can tokenize a farm in Malaysia, and he can take part in the profits that are reaped from that tokenization model. So this is just a slide, but my colleague will cover this in detail, like what is the difference between CeFi and DeFi. Just in one sentence, I can say that in a decentralized financial system, it's a peer-to-peer model. So basically, there are no intermediaries in between. If somebody asks about the exchanges, then my answer to that is that in a DeFi system, you don't have centralized exchanges. It's always DEX, decentralized exchanges. So in reality, there is no intermediary in between you and your receiver for your transactions. But in a traditional financial system, obviously you have banks, you have payment gateways, you have numerous gateways or numerous humps before your transaction moves from you to your receiver. So how does DeFi work? Very simple. The person one wants to transfer money to person two in a traditional banking system. It will go through your payment gateways and your approvers, then to the bank and back to the same model. But I mean, I've made the diagram very simple. So basically, for the money to move from person one to person two, it has to go from the bank. So bank has the control to stop you or whitelist you or blacklist you or stop your transactions or not operate because of a country's emergency or a public holiday or something like that. But in case of a blockchain, in a decentralized financial system, there is no intermediary, and the only entity taking care of your transactions is the smart contract itself. So there are smart contract codes, and the smart contract codes execute the way it has been coded. And since the property of the blockchain is immutable, so you basically the coder cannot get into the code and change the code for his own benefit. So once the smart contract is coded, it's audited, it's put on the mainnet, the whole system like starts becoming autonomous. So there is no friction in between. There is it really doesn't it doesn't matter like who built up the application or which company built up the application or who are the people behind the company who built up this DeFi project. It really doesn't matter once the project is in the mainnet. Okay, so what we can do with DeFi. So there are 5 or 6 things that are currently live in the market. There are as I said, there are numerous innovations coming up every day. It's all in the minds of the developers, like what kind of innovations they can come up with. So there are decentralized exchanges that help you to trade between different tokens and different cryptocurrencies. There are stable coins like DAI and USD Tether, which remove the volatility of the cryptocurrencies. There are money markets like Compound that enable lending and borrowing. And you have synthetics that basically democratizes finances for all. Basically, I will not explain these in much detail because like we have limited time, and we might, based on the response of the audience, we might like have another session to deep dive into DeFi and learn about each of these services. So these are basically the applications. I'll give you some examples of the applications from each of the category. For lending and borrowing, derivatives, decentralized exchanges, payment services, and fund management, insurance, lottery, and stable coins. So for lending and borrowing, Compound is a very popular project. So basically, the ecosystem of DeFi was changed by Compound. I mean, till June 2020 this year, since 2017 or 2015, the DeFi ecosystem had almost like around 6 billion worth of Ethereum locked into it. But since 2020, after Compound and Yen Finance was introduced, since June 2020 till this is November, end of November, in like around 5 months or 6 months, the value has gone up to almost 13-14 billion US dollars. So this all of this has happened in the last 5 months. So Compound is a very good example of lending and borrowing. There are many more projects in this category, but like projects like Compound, they operate as a liquidity pool that is built on the Ethereum blockchain. So I mean, my presentation is basically focused around applications that are built on the Ethereum blockchain, because the applications that are built on other blockchains have not gained the market popularity and the market acceptance as we speak. So what Compound does is Compound bridges the gap between lenders who basically wish to accrue interest from idle funds and borrowers who wish to borrow funds. So it facilitates lending and borrowing with a very innovative concept of more APY and interest rates. We have derivatives. The most famous project under derivatives is Synthetics, which is basically a protocol for synthetic assets known as Synths on Ethereum. Synths track the value of underlying assets and allow exposure to them without the need of holding the asset itself. So it's a synthetic asset. So under synthetics, there are 2 types of synths, like normal and inverse. Obviously, we'll have to deep dive into synthetics protocol to understand more about it. So the next project is on like decentralized exchanges and payment services. We have Uniswap, we have the upcoming project Ethereum, we have Kyber Network. So DEXs or decentralized exchanges such as Kyber Network, Ethereum, and Uniswap are based on liquidity pools for the direct exchanging of tokens via smart contract addresses. And like order book DEXs like DYDX work also like in a DYDX is like another project which is a decentralized exchange as well. In a similar way to centralized exchanges, although it's not a centralized exchange, it's a DEX. but basically users can place their order of buying and selling the cryptocurrencies at the market prices. Then we have category of DeFi application called fund managers. A perfect example is token sets. So in DeFi, fund management is conducted in a manner where a fund manager is no longer necessary and instead lets the end user to be command of the asset management strategy. So there is, as I said, I mean, one of the most important aspect of DeFi is that it removes all kinds of intermediaries. So even fund management, you don't have anyone to manage your funds, and the decentralized fund management therefore reduces the fees that you need to pay to any fund manager to reduce your to basically handle your funds. So this DApp or this decentralized application called token sets, they are like programmed algorithms which conduct trades for you automatically instead of having you to do this manually. So like you, you choose your trading tokens, and the DApp does all the work for you. It's almost like a kind of magic. Like you sit down and relax, and trading happens for you automatically without the involvement of any third party. Then we have insurance. There are numerous insurance applications that are being built as we speak in every aspect of the financial ecosystem. Even in Islamic finance, there are a lot of insurance applications that are being built to cover this the Takaful area. So Nexus Mutual is an example that I took for explaining this. So it's a decentralized insurance protocol that's again built on the Ethereum. So it offers coverage against smart contract failures such as bugs, because I mean, if people in the audience, they're aware with the DeFi news, there have been a lot of hacks, or there have been a lot of thefts on the DeFi ecosystem. So this is due to a number of reasons. Probably we'll cover this during our Q&A round, but there are a lot of reasons. The majority being that the smart contract audits are not taken seriously, and because you need a real talent behind auditing the smart contracts. Smart contracts are not like enormous codes. It's a small set of codes, but there can be leakage in the smart contract. Sometimes there are bad guys behind building the smart contract itself. So they intentionally they leave a loop hole in the smart contract so that once it's in the mainnet, they can themselves exploit it. So usually smart contracts are like audited by independent third parties, and based on the smart contract audits, people actually invest in those DeFi projects. So, for example, if I am asked in what kind of projects I would invest in the DeFi space, I'll go for those projects which have extensively been audited by independent third parties a number of times. So there are a lot of projects on the lottery. The most famous being the pool. So this is pooled together. So DeFi has also impacted the lottery sector, because this is where the decentralized gaming takes place. Even the blockchain-based games also come under the category of DeFi-based lottery applications. So this is where I mean, pool together is one of that example, where basically in a conventional centralized system, the prize money is funded from the lottery tickets purchased. However, in pool together in this application, the prize money is funded using the interest earned on the compound by the pooled user deposit. So it's little difficult to understand the working, but obviously we need to go into the white paper to understand how these work and how legal they are in terms of the jurisdiction it operates. Then we have stable coins. So stable coins are in a very I mean in a one-liner statement, stable coins are tied to the to the traditional currencies. For example, USD Tether is tied to the USD, so there is no fluctuation in the crypto, because the major reason why people are not moving towards the adoption of cryptocurrencies is because of the fluctuation. So this is where stable coins comes into play, where they are tied to the value of the USD. So DAI and Tether, they are tied to the USD. So So as the USD value goes up, the value of the currency goes up, and as the value of USD goes down, this values goes down. Basically, one USD tether is equivalent to one USD US dollars. So the primary use of stable coins is basically to help users hedge against price volatility, as I explained. And due to this characteristic, stable coins have become a big part of the DeFi space. I mean, a lot of projects are funded by stable coins, and a lot of transactions happen because of the volatility, low risk of volatility in its currencies. So these are basically the projects that I explained on the DeFi space. Obviously, I have a time constraint. I think I took more than what I was given, but yes, I think this is me. Over to you, Dr. Farooq.
Thank you so much, Jazakallah khair. And I think that it was a very good presentation. And actually, it actually set the pace of the whole session, actually, because like you have touched on all the basics and fundamentals of the DeFi, and then introduce us to other projects as well, and by giving some of the very interesting examples. So we have some questions. I think that we can go directly to them, and then they will please you can basically to the participants, you can ask questions by raising your hand, then I will unmute you so that like you can ask your question in audio, and also you can also type in your questions in the Q&A box. Thirdly, like don't worry about the questions. Actually, like you can have the time, and if even at the end, if we have time, we will try to basically answer all the questions and come back to our speakers as well. So with that, I think there was one raised hand, but I do not know what happened. I mean, the person actually, you might have answered the question, so he decided to actually to lower his hand. But we have two questions over here, a couple of questions. That's number one is, if DeFi space is completely decentralized, then how would a country measure its economy? For example, let's suppose that we have a country and its whole economy is running in a DeFi fashion. So how do you think that the whole economy can be measured, because it is decentralized as well as it's global? So yes, Naqib, would you like to answer that question? Mm-hmm. Okay, so Naqib has proposed that if we can basically ask the question after Morgan's presentation, if other panelists are okay, I can basically directly call upon Morgan, and then these questions will be saved for the next session. Then no problem, but definitely we will answer all those questions. So to just give you
meanwhile, Dr. Farooq, sorry to interrupt you. Just meanwhile, can you, Naqib can type the answers over there, and we go to the Morgan's presentation meanwhile.
Yeah, okay, sure. Perfect. So I mean, I'll just go through all the questions that's already there, and I'll start writing the questions that I can. And I mean, I really hope that most of them will be answered during Morgan's presentation. If not,
yes,
obviously,
sure.
I think that will be great. And if you think that there are a few questions which would need like live answer, that would be also good. Like if you think that like those are better for discussion, then we can have them in a live session, and then we can discuss them as well. So just to give an introduction of Morgan. So Morgan Dean is actually an international lawyer based in Zurich, where he is the CEO of investment banking group, Badir Halvia. And he has almost 2 decades of experience dealing with the largest international financial regulators, and has held executive board positions in the EU, UK, and the US. He holds BA, MA, LLB, and LLM degrees. And he's an international diplomat in regulatory compliance and is a US attorney admitted to the Federal and Supreme Court, New York. He's a recognized speaker and writer on matters of international law and governance, strategy and leadership, and is an advisor to early stage ventures with particular focus on disruptive technologies and innovation. He sits on the Forbes Finance Council as an ambassador for the International Financial Transparency Task Force, and is a member of the Swiss Crypto Valley Association. So I think that although Morgan has, I insisted that, okay, please give me a brief summary of your profile. So then he actually provided me this, but he is also advising Ethereum Labs also as a supervisory board advisor, and also with the director of strategy. So please, Morgan, to you.
Okay, good afternoon, everyone. Thank you for having me. I'll share my screen. I have put together some pretty simple slides. I just want to kind of give a very sort of a high level overview of where DeFi fits into the traditional finance world, and then we can certainly dive deeper in during the Q&A session. So I shall share my screen now. Okay, can you confirm you can see the screen?
Yes, we can see it.
Okay, perfect. Okay, well, I'm somebody who has worked my entire career in centralized finance, and I often get asked the question why I'm someone who's interested or excited about what's potentially happening with the creation of decentralization. And of course, I'm asked the question why I would support something that could potentially dismantle the industry that I work in. Now, I feel decentralized finance is not something that is going to necessarily destroy the traditional finance industry. I think it's something that needs to sit alongside it, because in my view, we do need to create a global financial ecosystem that has no restrictions whatsoever. Now, Mohammed, you mentioned earlier in your presentation about the fact that we have 2 billion people who have not got access to financial services of any kind. And that number increases if you start to look at people who are underbanked. So, you know, in the first instance, you have people who have no access to even the most basic bank account. These are people who are operating completely in a cash economy. They don't have anywhere to even put their money. So they're storing it literally under their bed or in boxes in their house. When you start to move along the chain, though, you start to come across people who do have a bank account, but are still heavily underbanked. They can't access basic loans. They can't access a basic credit card. And as you move further along the line, you find people who can access very, very minimal lending, but they don't have very interesting opportunities to increase their wealth, to grow their financial worth. So you have a large array of people who are restricted in this system. And it's a banking system that it simply can't incorporate those people and those groups. So we need to do something that fixes that. And the choice was to either completely redesign the financial system that exists or create something in parallel which could also work, which is where we sit with decentralization and in particular with DeFi. Now, when I talk about, you know, what do I mean when I'm talking about creation of wealth? I mean, if you take an example, if you're a very high net worth individual and you go to your bank will roll out the red carpet. They will give you everything you possibly need in terms of investment opportunities. You'll get a chance to participate in the highest yielding investment products that they have. And you will ironically get the best rates when you want to borrow money, even though you probably don't necessarily need to borrow money. On the other side of the coin, if you're somebody who really needs to borrow money, you will get the worst interest rate. You will have the most trouble trying to prove that you're creditworthy. And when it comes to trying to put your money into something interesting, you probably will fall below the threshold of the minimum investment into the products that are particularly interesting. So these are particularly challenging issues which are not being addressed by the system today. And even with simple things like payments, somebody can go into or log on to their bank in London. They can transfer money to their friend in Sydney, And then they can go to the airport and fly to Sydney, and they'll actually be in Sydney before the money gets there, which is something really bizarre about a financial system that we have in the year 2020. So decentralization is something that attempts to address all of these things. And I think you also have to take a step back and realize that this is bigger than just...
Excuse me, Morgan?
Yep.
Is it like your first slide, or are you moving your slides?
No, that's the first slide.
Okay, perfect. So like,
yeah.
I thought that like it's jammed. Sorry for that.
No.
Please,
okay.
Please go ahead.
Yep. So it's bigger than this. When we talk about a financial ecosystem that has no restrictions, the creation of wealth across the planet is very important as well, because we're living in a period of time where we're talking about climate change, we're talking about environmental issues, we're talking about social issues. And the most important part to fix all of that is to start to create an inclusion, a financial inclusion, which enables everyone, everywhere to participate, to increase their wealth, to have the opportunity for entrepreneurialism. All of those things will contribute to the kind of world that we're all trying to strive towards. Now, DeFi, of course, has its disadvantages and its limitations. There are a number of things which do need to be addressed in the early days, and we are in the early days of DeFi at this moment in time. The first thing is that it's perceived as being for technologically minded people. There is a problem that when we talk about DeFi, that we tend to get bogged down in a lot of technical details. And there are a lot of people outside of cryptocurrency and outside of DeFi who feel that they're not smart enough. They feel that they're not technologically minded enough to engage in cryptocurrency. So we have a barrier created within projects that we need to address, because DeFi itself should be very, very simple. It's something that solves problems, but we need to make people feel that they can approach it, that they don't feel excluded by it. The second point is linked to that. A lot of DeFi projects that we see on the market today are being built and marketed with only cryptocurrency enthusiasts in mind. So for example, when we see a new project coming out, we're told to read the white paper. And white papers are notoriously complicated documents that if you're not somebody who's deeply embedded in cryptocurrency, you will struggle to understand what it's trying to say. So in other words, if you're somebody, an average person on the street who's just curious, the white paper is not going to help you understand how DeFi can change your life. The third point is that DeFi projects tend to not always have an obvious use case for mass adoption. Anyone who has worked in an environment with startups or who advises companies when they're bringing out new products, there are kind of three golden questions that we always tell startups to ask themselves. The first one is, who is the customer that you're trying to serve? The second thing is, what is it? What problem is it that you're going to solve for that customer? And thirdly, why will that customer choose to use you to solve that problem? Now, many times I come across DeFi projects which will tell you that their value proposition is the fact that they are a DeFi project. And they will go into the long explanation about what DeFi is, but they fail to tell you what problem they're solving for you. And I think this is another hurdle that needs to be crossed by DeFi projects, so that when you're sitting at home on your couch and you're somebody who doesn't know anything about cryptocurrency, you will be attracted to the project because you realize it hits a pain point that you have, and that you'll be curious to check that project out because you think it might help you. And the fourth one is, there is still a stigma attached to decentralization broadly. And part of this is because blockchain and Bitcoin, we first heard about that in 2009, 2010, and into the early part of 2011 and 12. And the world was a very different place then. We had come out of the financial crisis. Banks had to be bailed out by governments. Countries were imposing austerity measures on their people. People were very dissatisfied with centralization. They didn't like the way governments handled the situation. They didn't like the way banks handled the situation. So blockchain and Bitcoin became the sort of poster child for not revolution, but turning the world upside down, changing everything, getting rid of central currencies, getting rid of banking. And that was a little bit extreme. And as time went on, people kind of settled down and became comfortable again. And the idea of decentralization was being batted away as being something that only angry people were talking about. I feel that DeFi is like a grown-up version of blockchain, because now we talk about decentralization not to turn the world upside down, but just to create an alternative for people who are excluded currently from the current financial system. So decentralization is something that needs to be seen as a positive. And I think we need to shake off the view that decentralization is only for people who are trying to turn systems upside down. Now, the DeFi and traditional finance, I guess we are at a point where the two of them are a little bit in conflict with each other, because Mohammed talked a little bit about it earlier on. When we talk about traditional finance, what we're really talking about is a centralized model. And by the centralized model, we mean that everything we do requires somebody to stand in the middle and process a transaction or confirm that something is trustworthy, et cetera, et cetera. So if I'm sitting in a shop with my friend and my friend asks if he can borrow $50 from me, I can hand him $50. But if my friend needs to borrow that money from a bank, there has to be a centralized process. I can't lend it to him through a bank. He has to go through a whole creditworthiness. Independent bodies have to verify whether he's creditworthy. The money is being held by the bank. And ironically, it's still my money. I put my money into a deposit account, and that money is being used to lend to my friend. But there are several people in the middle that are controlling that whole transaction. So decentralization is designed to take that out, to make things simple and allow the power of people to be interacting with each other, but in a way that's controlled. Now, there are a couple of things which are very positive at the moment with respect to DeFi and its role within traditional finance. The first thing is that it is being recognized in traditional finance. There was a very interesting interview a couple of weeks ago with the acting comptroller of the currency in the US, where he mentioned that DeFi is something which we all need to accept is going to play a major role going forward in the financial system. And what I found was quite interesting is that he probably gave the most simple definition of DeFi that I've come across. He said in his interview, look, if somebody has $10,000, they have a choice that they can go to the bank and put it in a savings account and pay the bank a fee, or they can go to a decentralized protocol and they can give it to the algorithm to find the best investment product for them and pay them a fraction of the cost. And he said, that is the new reality, and that is what DeFi is going to do. So I found it funny that somebody within the centralized world provided the most simple definition and the most simple use case for what this can do. And that is exactly what it is. Instead of trusting a bank, you're trusting technology, and it's becoming more and more recognized within finance. The second part is that cryptocurrency usage is growing rapidly. We had an estimated 35 million people in 2018 who were using cryptocurrency. In 2020, there were 191 million people using cryptocurrency, and that number is growing rapidly. And then a third part of this, which is really going to help the growth of DeFi, is the potential issuance of digital currency by governments. Now, digital currency will still be centralized. It will still be a digital euro or a digital dollar, but the fact that people are using digital currency means that they will be holding wallets that are also capable of holding cryptocurrencies. So it will mean that a lot of the people in these emerging markets who currently can't plug into the digital system will be pulled right in when digital currency is issued. So that's going to be a significant step forward and something that will, again, give more power to DeFi to become a significant player vis-a-vis traditional finance. The one red flag I raise, and I do think this is something we can't underestimate, is that DeFi is great. We're talking on webinars like this one about it, but within the real world of traditional finance, they remain very powerful in controlling the narrative and controlling the story. So the big global banks who may decide that they want to resist this change can easily control how people think about DeFi. It doesn't take very much to make people think that maybe it's risky, maybe it's a little bit uncertain, it's something that criminals use. I mean, these are things which we continuously hear, even still, about Bitcoin and about cryptocurrency. And it's not all true, but that narrative still exists. So for DeFi to really, really grow, it has to get over that speed bump that will be the kind of traditional view of cryptocurrency. And once we get past that, I think traditional finance can learn that it's not going to be replaced by DeFi, but it will have to live in the same house as DeFi going forward. The main issues and challenges that I see in terms of how DeFi can grow, one of the big ones is simplicity. We and I saw one of the questions put up there during the Q&A. Somebody had asked, what would the best computer language or computer coding be to understand cryptocurrency? That's exactly the kind of thing I mean, is that people think they need to understand certain types of computer languages. Now, it's different if you want to work as a coder, but if you're somebody who wants to use cryptocurrency in your everyday life, it should be so simple that you don't think twice about what you're doing. If Apple came out every year and at their marketing events started to explain to you that in detail the technology of what's going on in their iPhones, nobody would be interested in buying them. The reason we like iPhones and the reason we like technological devices is because they're simple, they're easy to use, they change our life for the better, and none of us are really thinking about what's going on behind the curtain. So DeFi needs to get to the place where people are downloading an app and it's as simple as using Uber or Airbnb. That's how DeFi needs to get there. We're not there yet by any means, but we do need to get to that point if DeFi is to become adopted by the masses. The second thing that needs to be borne in mind is catching the wave. And by that, I mean, right now, I think there is a wave gathering in terms of the interest in cryptocurrency, the interest in decentralization. Traditional finance banks are starting to recognize that, you know what, we can't ignore it, it's here. There's a lot of positivity going in the right direction. More and more people are using smartphones around the world. More and more people are accessing technology in a way that they haven't before. So it's important to jump on this at the right time and to start finding real world problems that can be solved by DeFi. If DeFi can go out to the world and say, look, you're part of a particular group, you have a problem, we can solve it, then DeFi can grow very, very fast. And the third challenge, and again, I think I saw a question during the Q&A about regulation. This is a big one. There are many DeFi projects that exist today, and they're banking on the fact that they will remain unregulated. And the reason for this confusion is because DeFi, the protocols of decentralized finance, are built on open source blockchains, which means they're sort of open to everyone. It's not centralized. It's not something you can really regulate. The old regulatory model doesn't fit on the world of decentralization. Now, I firmly believe that in 2 years, or maybe even less, we will see regulation coming in to decentralized finance. It will have to be different. It will have to be thought through differently because decentralization is different. But in order for people to feel safe using it, I think we have to have some degree of regulation. It's important that we don't stifle the development of DeFi, but we also don't want that people think this is about creating the Wild West. Now, I know there are people in decentralized finance who will scream when I say that regulation has to play a part, because in their minds, they might have a purist view that decentralization means no centralized bodies are looking at it and there should be no regulation. I think we need to understand that we're trying to solve problems here. I mean, when I go back to the beginning and I say that there are 2 billion people who can't access the finance system, that should be the goal. The goal isn't to try and prove to people that you can do things without being regulated. The goal should be to fix the problem. And if it takes a little bit of regulation to do that, then I think we need to be open to it. And I think whoever is operating in the DeFi world needs to find ways to engage with the regulators so that regulation is sensible. It achieves the goal, but it doesn't stifle the development of DeFi. Now, to finish off the presentation, I would talk about what a typical use case would be. And Mohammed mentioned a couple of times what we're doing at Spherium. So I'm helping and I'm advising strategically on the Spherium project. Spherium has also rebranded into another arm called Amana DeFi. And what we're doing here is we're trying to take the concept of DeFi and apply it to a real world problem. So what we're doing is we're going to create the first fully Sharia compliant decentralized finance offering. It means that at the moment, if you access a DeFi protocol, you don't necessarily know what you're engaging with or what you're going to invest in or what activities you do on the platform are compliant with Sharia rules. This is something we are addressing. And I used, without going into great detail about the product itself, what I want to stress is that this is our attempt to go out to real people with a real problem in the real world and say to them, we are using DeFi to solve your problem. DeFi isn't what's going to make us different. It's how we're using DeFi that's going to change your life. And we can do things that traditional finance can't do. We can give you things that you can't access today. We can give you certainty that you can't have today. And if we can do this properly, it'll be a proof of concept that we can get past the world of feeling that DeFi is something that only technical people can use, and that everyday people can see how their lives can change with DeFi. And I think if there's anything that I would say to finish off this talk, it's that exact point, that if we could bring DeFi to the next stage where you start to use it and you don't even know you're using DeFi, that you're downloading an app that gives you the chance to do things that you couldn't do yesterday, and that's it. It's like using Airbnb or using Uber. You're not really thinking about how the technology is running in the background. You're just thinking about being able to do something you couldn't do yesterday. So I think this is really where DeFi has the power. I think we're at the watershed moment in the development of it. I think we will see projects coming out in the next 1-2 years which will do exactly that, where people that are not cryptocurrency enthusiasts, their attention will be drawn to projects which solve a problem for them, and they will be attracted to it because of the problem and the solution, but not the fact that it's DeFi. I hope that was okay. I'll get back to the Zoom again, stop sharing, and that's it. I'm happy to answer more questions in more sort of general about that.
Okay, thank you so much, Morgan. It was a very wonderful presentation, very clear and very to the point. We have a few questions, and I think that they are very much interesting. So let's start with but before that, let me just ask Naqib also, because he has responded to some questions that he would like to answer them in the live question. So Naqib, would you like to start the question and answer now?
Yes, yeah, we can start.
Okay,
but
perfect.
All those questions that I marked live was actually I thought of putting on Morgan for a better answer, because maybe I'll struggle with them.
I think that if they are relevant to the presentation, definitely we can take them
definitely
both.
They are relevant, and they are very good questions, in fact. And it would be better if Morgan answers them, because like Morgan comes from a CFI background, and he has basically moved into DeFi, so he really knows the transition over there.
I mean, there is no problem. I mean, both of you can answer question, no problem. And if you have any feedback, just hop in, and then
so there are 3 questions, Morgan, in the Q&A that I marked it out for you.
Okay, so I will go one by one. So there is first question by Shehbaz that if there is a decentralized system, then how would a country measure its economy? For example, let's suppose that a country decides to implement a completely DeFi economic system. So then how would they measure their the whole economy?
Okay, is that one for me, Mohammed, or?
I mean, if you feel free to come in and give your answer, your feedback.
Mohammed said this is for you.
Okay. Yes, please, Morgan. If you have any thoughts on it, please.
I think from my side, I think you know, when we're talking about measuring economies today, I mean, that information is being pulled from a number of sources, including banks and financial institutions, including governments themselves in terms of the records they have. The concept of decentralization doesn't mean that it makes it harder to track. In fact, if anything, it makes it easier to track, because information and the ledgers they can't be changed. They're open source. Eventually, I mean, it's not going to happen on day one, but eventually you will have a system fully plugged into the blockchain where this information will be completely transparent. So actually the measurement, the metrics, and all of the things that are used to determine the size of an economy, those kind of things will be more accessible than ever, and actually accessible to everyone. So I would think certainly theoretically this should be an easier problem to solve than what it is today.
I just want to add something.
Yeah, it's the same as Morgan said. It's gonna be easier today to count. How you count the size of the economy? By GDP. So with the GDP today, you will see what is the contribution of the DeFi projects into the economy, and how these new products that being created and projects gonna contribute into the economy. And with that, you can calculate the new GDP, and you see the difference and how this is being inside. The blockchain, everything is in the ledger, in the distributed ledger. So you have a smart contract that can capture all the information that you need. With certain oracles, you can go and capture the actual traditional GDP, and then you add up and you get the final one. As simple as that.
Thank you so much, Muhammad Sheikh Al-Rashidi, for your feedback. Let me just introduce Sheikh Rashidi as well, because I was basically waiting for the panel discussion to be started, but I think that it's a very good time.
It's started already, because we're gonna go to Q&A.
Yeah, I think that, yeah, I agree with you. So it has already started. So let me just
your questions.
So let me just start it with the formally introduced Muhammad Sheikh Al-Rashidi. So Muhammad is basically the founder of multiple ventures in telecom, mobile content, mobile health, mobile tourism, mobile education, government, and fintech. All his ventures are addressed under its group, which is called the One Global, OG, and idea generation and incubation ventures with business model adoption to the market needs and future growth. Muhammad is an aspiring entrepreneur with passion for mobilization of lifestyle services. He acts as a transformer to the current infrastructures of verticals markets. Diversity and unity of OG Group, which is One Global Group, makes its mission towards its one vision achievable in 2020. Muhammad founded OG Money, formerly known as PayIt, a mobile financial and payment platform with a strong presence in more than 12 countries across GCC, Middle East, North Africa, East Africa, West Africa, Europe, and US, offering payments, merchant services, mobile POS, mobile banking switch, mobile wallet, and money transfer. Muhammad invented a patent in the fintech industry registered in the US and other countries for performing a card presence transaction on the cloud. Muhammad is driven by his philosophy, which is performing a mission always requires brains and machines, automation of resources, and map of thinking to process to be successful. So I think this is a wonderful philosophy. And with that, I actually formally introduce Muhammad here. Welcome to the webinar and welcome to the panel group. I think that, yeah, it's a very good time to ask these questions in the panel, and whoever is comfortable in the panelists, among the panelists, please feel free to chip in and respond accordingly.
Mashallah, nothing is left over, Dr. Farooq, for Sheikh Rashidi.
Yes, mashallah.
Covered everything. He have left nothing for us to do.
Yes, definitely. Mashallah, good. It's really good to have him. So I think that was a very interesting question. Let me go to the next question. And again, all the panelists, feel free to share your thoughts on the question. So, what issues do regulators need to consider with DeFi? I mean, if they are dealing with a DeFi project or a business, so what regulatory issues do they need to consider? And what issues do Sharia compliance bring? So I think that for Sharia compliance, I can handle that. But for the first part is like what are the regulatory issues you can think of?
I can take this. So
yes, please.
Regulators always care about three major issues. So actually four. The monetary, so they need to know the liquidity inside that protocol to be an overall policy of the monetary to the currency and liquidity inside the country. The second one is the AML, so all the sanction lists, actually OFAC, PIP, CFT, all these sanction lists needs to be done. So the compliance is very important for them. The privacy and customer protection. So these are major worries about any regulators. So with the DeFi, you know that there is no KYC, there is no screening on the sanctions. So Without compliance and without KYC, you are having the issue of the regulators. Other than that, accessing the blockchain and knowing the sources of funds for these wallets become pretty obvious nowadays, where you can go and parse both Bitcoin and Ethereum blockchains and know if these wallets are being created and the Bitcoins or the Ether came from a dark web or came from some human trafficking activities or some bad activities in the hood, under the hood. So these are the challenges that will be majorly regulators gonna face and look into resolve in order to certify such solutions. And I believe it's happening.
Dr. Farooq, just want to add one thing is that in decentralized and blockchain, these all platforms, one thing is that there are some authorities which is taking in board that all the people who are doing the transaction. Main thing is that the originator, where you are originating the transaction and where you are ending the transaction. There is complete trail available for that one. When you are going anything digital and on a decentralized platform, it means the trail is already there. So it becomes more easier and more apparent and transparent to the authorities and regulators to track the movements of these things as compared to other things like that. Like, if it's originating with a person name and what are the tracking. So what I think myself is that I'm on an opinion that in a decentralized platform, especially the traceability and transparency are more apparent than the centralized one. So it will be easier for the compliance and all the authorities to track down these things.
Okay, perfect. I think Morgan, would you like to add on something, because definitely you must have some feedback being an attorney.
Yeah, I mean, this is a big challenge. I agree with everything that has been said in terms of the things that need to be focused on. I would imagine that suitability of the things that people are engaging with in DeFi will at some point have to be a consideration, because even, and Mohammed mentioned it in his presentation, I mean, it's what one in three people are not really sophisticated when it comes to financial products. And these are people who are operating in the traditional finance. We need to be careful that DeFi doesn't offer completely unsuitable products to people. There needs to be some way of controlling that. But I think the umbrella that all of this needs to be underneath is that regulators have to completely change their mindset. The regulation has grown in a very, very different world. It has grown in a centralized world. It has grown in a world where technology couldn't do the things it can today. And we need to be careful. Regulation is designed to protect people, and that's important. But if in the endeavor to protect people, you exclude a huge chunk of the world's population from the system, then that's not working either. So I think regulators need to try to be open-minded, really, if anything.
Okay, perfect. Naqib, would you like to add something?
No, basically,
okay.
I think most of the things is covered. But yes, the reason why people move from a centralized finance to decentralized finance is for the principles of an open blockchain. And when we say open and permissionless blockchain, it literally means that there is no KYC and there is no way to basically stop you from accessing the financial systems. For example, I'll give you a very small example. There are some people from a country which is under embargo, considering, for example, Iran in the US. So the people who are born in Iran and they have moved to the US, they cannot open their bank accounts. Okay, even though they are working in a good job and they are living a decent income, still they cannot access to the financial system because their origin, the place of origin is Iran. So people like this, if they come on the decentralized financial system, it will be easy for them to access the. It will be basically they will be under the category of financial inclusion. But if you again bring in the concept of KYC for them, so basically the government will find a way to stop them. So what's the use? I mean, why are they at all coming to the DeFi ecosystem if there are regulators stopping them from using the financial systems? So regulations is important for sure. I'm not against regulations, but it has to be in a way. It has to be in a way not to stop people from actually utilizing the financial benefits. So basically the innovators and the regulators have to come together on the same table and discuss how to actually handle these things, rather than like taking the regulations of a particular country and coding them in the smart contracts so that these actually take place for the new onboarding users. Like that is my personal view.
Okay, perfect. I think that I can take the liberty to answer the second part of the question about Sharia compliance. So for any DeFi project or product, first of all, let us see that like Morgan also stressed in his presentation that DeFi itself is it's not something I mean like desirable. The thing is like DeFi's are the solution actually for a problem. And again, when we are talking about DeFi decentralization in finance, then basically fundamentally those are financial products first. Now, how you are going to structure them, how you are going to deliver them to the customers, and who are your customers are basically where the decentralization part comes in. So again, so from the Sharia perspective, Sharia has actually defined rules and fiqh. In fiqh, I mean the classical Islamic law, we see that there are very comprehensive rules and principles given for financial transactions. So we have to keep in mind all those Sharia principles and rules while structuring a DeFi project, number one. For example, there should not be any riba involved. There should not be any gharar involved. There should not be any gambling factor involved, and uncertainty should not be there. And even the parties of a transaction have to fulfill certain conditions, and they have to meet certain rulings. And then it's not only about that, like the subject matter of a transaction has to be Sharia compliant as well. So Sharia has given certain criteria for various type of asset classes, just like crypto assets also. So Alhamdulillah, I was able to develop a Sharia screening criteria for crypto assets. So like we can know that, okay, if this is a crypto asset, whether it is Sharia compliant or not, so that can be done. Number one. Number two is like once the subject matter of a transaction is ensured to be Sharia compliant, then we move on to other structures and terms and conditions of a transaction. And in those transactions, we need and terms and conditions, we need to ensure that all the Sharia principles are adhered to, number one. And the major prohibitions and minor prohibitions also are avoided. This is the second part. And then how you are going to package it with other financial services and products. This is another challenge we have to face to ensure that all the things are in Sharia compliant manner. So I think that this is basically the thing, the major concerns in a nutshell, where we can ensure that a DeFi project or product is Sharia compliant. So moving on to our next question from Dr. Adama, is that when talking of a new era which is decentralized, I think we need to draw lessons from the former system, which is the conventional financial system. So in this perspective, main drawbacks were highlighted, like deregulation and sophistication. How the new system addresses these issues. So we, in this question, I think that we are mainly focusing on deregulation and sophistication. So how we can address these two issues in a DeFi system? So Mohammed, would you like to answer this question?
Mohammed, can you unmute?
Can you unmute
Mohammed
please,
Al-Rashidi.
Naqib? Or yeah, Mohammed Al-Rashidi.
Yeah.
Yes, yeah, better to say Mohammed Al-Rashidi, and because we have to.
I would go with Naqib and Al-Rashidi.
Yeah, very good. That's what
Okay, perfect. So Al-Rashidi, would you like to answer this question? That okay, the main focus is how do you deal with deregulation and sophistication in a DeFi space?
Okay, we talked about it before. It's the same. It's the same rules that are in the rule book that regulators are having. It's gonna be coded inside the smart contract, where you have these smart contracts act as the governance and also the automated audit and all the rule book controls that would be applied. So basically, I believe it is this decentralizing the rule book and automating it. It's not only decentralized, it's an automation. It's gonna help the regulators to offload themselves from a lot of burdens and a lot of work that is being done today, either sufficiently or insufficiently, and effective or not effective, comprehensive or not comprehensive. With the DeFi, this is going to be very simpler and going to be more efficient.
And about the sophistication, Mr. Asif, I would like to chip you in. That do you have any feedback on how sophistication can be dealt with in DeFi space?
See, this DeFi, I personally think that DeFi can work only when there is an ecosystem available. This on the basis on ecosystem, it means that we have this identity. We are on blockchain. The identities are on the blockchain, which is verifiable. So these things become apparently easy, which Muhammad Al-Rusdi, this Sheikh, have already identified, and then Morgan and Naqib have already said these things, that there is no AML, there is a problem for AML, there is KYC, these are the problems. So I personally think that on a larger scale, on a country scales or whatever is there, the DeFi can become, play a wider role, and they can be acceptable by the authorities and other things when there is an ecosystem for that. In that ecosystem, it means that the foremost thing, which is I personally think, to going everything on blockchain, is that identity has to be on the blockchain.
Okay, perfect. Morgan and Naqib, would you like to add something on it?
No, I think I'm good. I mean, most of the things are covered.
Okay, then I should move to this another question. So the question is how KYC and AML issues will be resolved in case of DeFi. I think that we have already talked about it, that how we are going to solve KYC and AML issues, and Naqib also put some light on it. Yeah. But if you would like to add, like Muhammad or Morgan, if you would like to add something more on KYC and AML aspect, please do so.
Yeah, from my point of view, I would stress again, this will require a rethinking, because I feel that not just the regulation, but I think the way that banks and the compliance departments of banks have been implementing AML and KYC rules over the last 15, 20 years has almost lost sight of the reason they were put in place in the first instance. Banks are not the law enforcement agencies. They're not entrusted with stopping money laundering. They're not enforced with going out and finding where criminals are residing. They're just putting systems in place that will assist the law enforcement agencies in the event that an issue arises. So when we're talking about decentralized finance, we need to take a step back and figure out what's the most important thing here. Is it critical that we know who the person is that's using the protocol, or is it more important that we can trace the transaction from beginning to end? And I feel that once we agree that we're achieving the same aim, but we're just doing it a different way, I think it can be very, very effective. But in order for that to happen, again, it's an open mind. It requires regulators and lawmakers to think about this differently so that we can achieve the same things, but in a way that makes sense.
Okay, perfect. There is one question about information asymmetry. So because like we have financial intermediaries like banks, other financial institutions to avoid information asymmetry, because this issue is very, very huge in finance. So how in a DeFi system we are going to solve this issue? So if you would like to add some, to have some answer or feedback on this question, please let me know, or maybe I shall start with myself. Actually, asymmetry of information is really a huge issue in finance, and we can see them in those issues coming up in the financial space due to this concern. But in DeFi space, due to complete transparency, traceability, and disclosure, we can avoid the asymmetry of information. Because once a transaction or a financial data or a product is interacting with other, let's suppose another API or another transaction is being done in a blockchain space, so the traceability is already there, and we can always extract information from that distributed ledger, which is also shared among all the network and computer nodes. So because of that, we can always have that data available for us. So I think that in a DeFi is very much stronger, an ecosystem, and that ecosystem is very much stronger in the sense that it gives you extra features like traceability and transparency, public disclosure, so that like you can avoid the issue of information asymmetry. But I think that our panelists also have some thoughts on it. So let's hear Mohammed, would you like to go on this?
Okay, basically the discrepancy between the contracts of the buyer and seller, this is also asymmetric information problem that has been faced. So you can sign a contract if you take a loan and you don't know what is hidden rules and some information. So the seller is knowing more than the buyer, or the buyer knowing more than the seller. That's the problem. And I believe this has already been mentioned by yourself, the exposure and the transparency of the platform, where you have the clear rules and the clear protocol showing exactly what you're gonna, if it is in case of a lending, what's gonna be your fees for that setup. If it is something that will done on Murabaha way contract, or on Mudaraba, if you will take a revenue share out of that, or on Wakala, you will take a fee. So all these rules gonna be clearly exposed in the protocol and being enforced by the blockchain and the smart contract.
Okay, perfect. Okay, there is one question that how can you avoid systemic failure due to the underlying blockchain failing, because DeFi popularity overwhelms it. So the question is like, how can you avoid a system failure in a blockchain system? And because the DeFi is actually getting overwhelming response from the masses, and people are actually accepting this space and entering into this space very rapidly. So how can you ensure that the system remains resilient, and we can avoid some systemic failures as well?
So I'll take this as a question.
Yeah,
so basically the answer is pretty simple, because the advantage of a blockchain system is you will not have failures. For example, in the past 11 years, we have Bitcoin blockchain running. we did not have even a failure even once. The reason is because they are decentralized and they are distributed. So they are like both at the same time. When you have a centralized server running and different nodes connected to it across different banks, different countries, the centralized server crashes. So the entire ecosystem comes down. But when you're talking about a decentralized ecosystem, so there is no central server. I mean, it's plain English. It's decentralized. So there is no central server basically controlling the entire network. So since the DeFi applications runs on the blockchain, if the applications are not on the blockchain, it's not a DeFi application. So if a DeFi application, I mean, the moment you hear it, you can think of it that it's running on the blockchain and the property of the blockchain takes over. It's not the property of the DeFi application. It's not the credit of the DeFi application. It's the credit of the underlying technology below it. And that is the distributed ledger technology or the blockchain or the hash graph or the DAGs that basically prevent the system coming down.
Okay, perfect. Mohammed, would you like to add something on it?
No, I believe it's clearly being said by Mohammed. It's decentralized. So you are having it distributed. If the question came from an IT, it's a distributed computing. So if this fails in one node, it will take over from another node. And the miners are spread all over the globe. So.
Okay, we have one very interesting question. I think that it definitely asks for a very deep thought. That digital currency, as we see them now, and they were mentioned, and indeed, it will not really be they will not be decentralized in the sense that, okay, if you look at the mining and if you also look at the big whales holding big wallets. So you can see that like they have the ability to move the market. So in a sense, it is centralized, although like the space has been called decentralized. So what's the difference between then from now? And the question Magdalena asked, that she said she would say 99% of money, currency, fiat is online, digital already. So what will be the differences? And there is another part of the question, that underlying technology a priori decentralized but centrally governed. So are we actually having such kind of products or services which are decentralized in nature, but they are governed centrally? And do we need them also? I mean, like, if this is the case, then do we need them? And if that doesn't even set much difference, couldn't we achieve that on the existing finance? So I think that it's a very good argument, but let me just put it into various pieces. That's first of all, like if you can see the cryptocurrencies, so they are actually held by big companies. In the mining also, there are very big companies, and it's sort of like centralized system. So how do you see DeFi can make its impact, in the sense that it's completely DeFi and not centrally governed? So Morgan, do you have anything to add or share your thoughts on it?
Yeah, well, I think Magdalena has raised a very good question. This is absolutely true. I'm not sure whether 99% of money is online or digital, but I think the question to focus on is not whether the existing money is online, but rather how many people can access it. It's not very, currently that system is accessible if you have a bank account. So the question here is, will digital currency potentially create a greater inclusion for people who are outside the financial system? And that's where I see the difference. If you are going to continue to exclude 2 billion people from the financial system, then yes, we could probably just issue digital currencies, keep it quasi-centralized, and forget about DeFi altogether. But if you allow digital currencies to be issued, they will be issued on a blockchain, and the holders of that currency, that digital currency, will be connected into blockchain, including DeFi. Now, why is that relevant? Well, it's relevant because if you take the unbanked people in emerging markets around the world, they're living in a cash economy. They're being paid in paper money. And even though we have these solutions which can help them, they still have to convert that currency into digital currency. They have to convert it into cryptocurrency today. So unless they can get to a city which has a crypto ATM, or unless they can find somebody who can help them set up a wallet, that's not going to happen. With digital currency being issued, it means that regardless of where you are and regardless of what job you're doing, you can now get paid in a digital currency, which means you will hold a wallet. And once you get paid for your job on a farm or on a building site or in a small kiosk, wherever you are now connected to a digital environment, which you can then plug into DeFi. So I think digital currencies is important for that reason.
Mm-hmm. And Mohammed, would you like to add something on it?
Okay. Basically, it depends on the digital currency if it is issued by the central banks, if it is a CBDC, or it's by a big tech like Libra. So if we are talking about CBDC, it is correct. It's not completely decentralized. It's a sort of hybrid, but it depends on the architect itself, how the central bank would like to deploy it. Either themselves hold the wallet, the reserve, and have the wallet directly with the people and the citizens, or they will have another tier where they can become the issuers for that token or that currency, digital currency. And those tiers become building an ecosystem to make a financial inclusion, digital financial inclusion, by having the network of agents to tap into unbanked and onboard them, by enabling them for the wallet. And they just got the QR. Anywhere they go, they just scan that QR and done. So they don't care about how sophisticated and how complex is the technology behind that. But it depends on the policy and the strategy, how central banks would like to deploy that kind of ecosystem to coexist with the current one. Of course, they will not vanish in day one, the current traditional way. So the CeFi will stay. And in parallel, you will have the DeFi. It's going to tap into the online business majorly. Slowly, it will go into the offline business and by phasing out the traditional way. Interoperability going to be an issue because the 1.7 or the 2 billion unbanked are scattered globally. So this wouldn't be a quick solution unless there is a big microfinance, the MFIs, institutions play a role with some US aid, these organizations that always try to support the poverties and underdeveloped markets. They can distribute such wallet, and then after that, whatever inside this wallet, they don't care. So for them, it's like the airtime for the phone. When the counter shows them that they consume their number of minutes, that would be the same token for their digital currency. And even in their card today, they don't touch the cash. They have the card where the card is storing the value that is inside the bank. So whatever inside the bank would be on the blockchain, whatever this value would be more into the token. And the wallet, the card is going to be the wallet, the crypto wallet. But in a very smooth, automated, and traceable fashion than the current system.
Dr. Farooq, I just want to just clarify one thing with Magdalena right in the question. I would say 99% of money, currency fiat is online, digital already. What differences underlying technology, is going to make? The underlying technology, what she's trying to say is that already we are in digital. What the DeFi will be doing? The DeFi will, abolish the intermediaries on a very futuristic way. We can say that, loans will be automated, loans negotiated between two people sitting in two different parts of the world, and in between there is no bank. So what we are talking in DeFi, like in all blockchains, which is the core thing, is that the intermediaries are excluded. Currently also, we have online transaction and everything which is controlled by central banks or some central authorities. But ideally in DeFi's, these central authorities will be no longer required. So it will be like C to C, B to B, whatever is transaction is done, it will be done directly with each other. So the cost will go down and the time it will go down. It will be more efficient and more cheaper.
Okay, perfect. Magdalena actually also has a follow-up question. That thank you. My question is also provocative. That I wonder how we can keep that development we are experiencing as decentralized as possible. So digital currency just for unbanked, only this use case. We can do more. World is ready for more. So what she's suggesting is actually like number one is how we can ensure that the decentralized space would remain as it is, number one, and number two is like how digital currency can play a bigger role rather than being a use case for unbanked.
See,
I believe
I think I'm like.
Okay,
sorry.
I think Naqib, you can go first.
Okay,
No problem.
Yeah, see, actually, there's a difference between digital currencies and cryptocurrencies. I mean, this is the like basic, as a foundation level, we have to understand this difference. So digital currencies are usually, I mean, everything is digital currency, for even the cryptocurrencies are digital currencies. But digital currencies, when somebody talks about digital currencies, they are actually talking specifically about CBDCs, central bank digital currencies. And these are digital currencies, although they use the property of the blockchain, but actually they are backed by the central bank. So they are central bank issued digital currency, central bank issued currencies. And one of the major reasons why they are issued is to stop the population to moving into currencies like Bitcoin and Ethereum and all other altcoins. Okay, so this is one of the major reasons. But DeFi has nothing to do with CBDCs. DeFi's actually don't use any of the CBDCs that are in working in current stage. DeFi's have their own platform tokens, and they have their algorithm to swap between the market ready tokens, like for example the top 10 tokens in the coin market cap. So when we talk about digital currencies, we are specifically talking about the currencies that have been issued by the central banks, which they know how to trace. They know how they are usually you can call it otherwise as a programmable fiat money. So I mean, this is the better way of calling digital currency. They are programmable fiat monies. They are created by the central banks. They are governed by the central banks, and they know perfectly how to take care of tracing the transactions.
Okay, yes, thank you so much, Muhammad. Please go ahead.
I believe that's correct what you are saying, Brother Muhammad, but CBDC is, end of the day, gonna be staked or being locked, and whatever services that today you are getting from the current protocols gonna be applied. So you can build the liquidity pool, you can do the lending, the borrowing, the same strategies that's happening in DeFi can be done with the CBDC. So there's no
it can be done, yes.
It is more into depends on the protocol itself. If you are looking for the derivatives out from the currency, the fluctuation of it, this is something different. But there are a lot of protocols works with the stable coins, like the Tether,
the USD Tether and DAI. Yeah, so, but Brother Muhammad, the thing is, the digital currencies which are issued by the banks, as of now, they have not come into the DeFi ecosystem. I mean, none of the projects that are there, I mean, all those 329 DeFi projects that are listed in the DeFi Pulse, nobody uses CBDCs. And currently in the entire world, although more or less every country and every central bank is already experimenting or are working on central bank digital currencies, China is the only country that has already launched a CBDC. Okay, so they call it DCEP, digital currency. I don't remember the full form, DCEP. So they have already launched their digital currencies, and they are already experimenting the trade, I think, in Starbucks and McDonald's. So China is the only country which has made public the CBDCs. Even, see, for example, you are in UAE, you are in Kuwait, and I'm in Saudi Arabia. There is a wholesale CBDC already in place between UAE and Saudi Arabia. But this is again between the governments. When you're talking about CBDCs coming, yeah. So when you're talking about the CBDCs coming to the usage for the public, it's still not available in the entire world now. What we can do with the CBDC?
As I said to you, it depends on the strategy, because you know in India, when they stopped all the low denomination and they said only fiat low denomination has to be done via the wallets, and BTM collapsed that time, and all these wallets in India collapsed because the big rush that happens. It depends on the policy and the strategy that how governments will act. There are governments today that are facing a threat, especially here in the region, in Lebanon. Everybody is buying Bitcoin. Why this spark happened in the Bitcoin? Because they don't trust lira anymore. So you are losing the sovereignty of the country and its currency. If you don't have the proper setup that would compete and give better benefit and incentives from that ecosystem, that is happening. Now you will be having like the black market and the regulated market. So DeFi, if it is gonna go in a proper way, all central banks should look into that. Regulators should look into that. And they have to give it the trust, which is very important. If you, as you mentioned, programmable fiat, today the fiat is in my pocket. Nobody can make it fake or counterfeit. It is in my pocket, I can take it and give it to a merchant. But what about if I have a CBDC and I go to the merchant and it is disabled? I cannot use it. I'm gonna become very frustrated and I'm gonna work against the system because you slipped me my right. You slipped me my money. My sovereignty is being hacked. So with that situation, it depends on, I'm saying it's a very critical, how governments, central banks would like to deploy their digital currency. If it is today, does not exist. In the coming 5 years, it will become exist. Every new instrument, when it has been like the credit card, when it's been launched, nobody was using a credit card. Even today, if you go to the country, you will see 18% credit card, and the remaining is the local scheme of the country. So still governments empowered build the local scheme, and they get the card system and retain their the trust to the nations and the people to use it, not to go to the credit card. So this is the same thing would happen if you see the credit card as becoming to build and create the buzz and create the reform and make everybody think of it until they come up with the local schemes. So the same thing would happen with the DeFi. It will shake and shape until it's become very clear what are the pros and cons and how they can give it a sort of control to bless people and get it deployed inside the country and get everybody to use it. Whatever, it's an amazing, the CBDC, because you can do everything with it. But the strategy of making it with the same intrinsic value, the decentralized, having others to issue that, having the proof of stake to become the protocol for consensus instead of the board of the bank. So you have a proof of stake to do the job with the algorithms, with the algo trades or algo compliance. This would be the I believe the big thing that is now becoming in all these war rooms, thinking of inside Europe or inside the Middle East or inside China. China is not a blockchain. China, it's a centralized, it's a clear, it's an e-money. So whatever in China is an e-money. It's just waving the yuan. And I believe later, it's the same mentality and the same strategy as the one belt, one road. Mm-hmm. You need to have the spots where the distribution and logistics happens. The same thing will happen with the currency. Because in order to trade with me, you need to buy that. So the proof of stake will come slowly. If you don't have the e-money or the digital currency of China, you cannot trade. You cannot buy from me. So
Perfect.
It's a different story. China and this is currency.
I think, yeah.
I don't know.
I also agree with that.
But you brought the country name, and we are talking.
But I think, yeah,
we are seeing. So
with all the decentralization, China might remain very much centralized. Yes, I can see that. So I think that we are just coming to the end of our session. But as a final thought, I would like to ask all my panelists one by one. So I will go first with Morgan, then Mohammed, and then Naqib, and then Mr. Asif. That my question is, how will you see the DeFi space within the next 4 to 5 years, and what shape it will take? So this is second aspect. And third aspect is, what do you suggest to the financial professionals to prepare themselves for the future?
Okay. Well, I mean, my personal feeling is the shape it's going to take. I mean, I think it's going to become increasingly more important. And I'm assuming, and maybe I'm wrong here, but I'm assuming that there are going to be projects which are launched which are specifically addressing issues in the real world, and that people will start to adopt it because they like the problem that's solved. And I keep stressing that because it's important that this isn't just a technical thing that people talk about, that it is something that is introduced into the real world. In terms of what should a financial professional do, in 2020, there is definitely no excuse for not upskilling yourself and not educating yourself. And it doesn't mean going back to college. You can, between all of the resources in terms of online courses, but also just the amount of information in books, in podcasts, in webinars, even like this one, where people are talking about the issues, and you just really need to get a basic understanding of what this is about. And then look at the world you're operating in as a finance professional and think, where could this make a difference to what we do? And especially people who are setting strategy. I think it's the one thing you don't want to do is to sit with your eyes closed and hope it'll just disappear, because it won't. You have to educate yourself. You have to know what it's about and find opportunities that will arise.
Perfect. Thank you. Mohammed, what would be your response?
So I second Morgan. It's going to be becoming very important. As I mentioned about the digital currency, the CBDC, this is one aspect. The other aspect is the tokenization. When all the assets become tokenized, these tokens going to be a swap machine between them. So you swap every asset globally with another asset easily via the DeFi. And this mechanism, when it becomes, so what you need is just to do a strategies, how to do this kind of business. Like this protocol sits, how it is using algorithms to do for you the trading on the crypto exchanges. I believe it's going to be more sophisticated with the AI, where it goes beyond that only exchanges. It goes into the entire ecosystem and start to make the wealth from many aspects and very complex matrix out of the yield strategy that, or the yield objective that you would like to achieve. Very important to include the open identity. This is something happening today with the SSI, this Hyperledger ND. As Sayed said that identity is very important, digital identity is very important in the DeFi in order to continue to complete the cycle. And this is, I emphasize more into that because this will impact also on the digital KYC and AML and all the compliance regime. When you have the open identity, and instead of storing it only inside the issuer database, either government or private, into the verified, to become a verified credentials that accessible globally from everywhere. So with digital identity, that transparency and clearancy and the digital KYC, the compliance being resolved, with tokenization, having all assets being tokenized and ready inside wallet, and then from that wallet I can just do listing and make swapping to another asset that is making for me better, with AI impacting into and contributing into that by enhancing the cryptism, the cryptography of the blockchain to become more secure and more agile. That would be the way forward. And IOT would be then contributing into the action at the end for smart cities. So this ecosystem actually is shaping up, and with the speed and the question about the speed is going to happen with the quantum computing. You can see the fourth revolution, industry revolution, how it is contributing into the ecosystem. It's not only what is happening inside the blockchain. That's why I'm coming from this digital transformation era. And because we are working in many areas and many working streams, we can see how things are connected and how they are looking into bringing something very big and huge. It's the second existence, by the way, how this would be contributing into the economy and global economy and the shared economy and the crypto economy. This is basically at a glance how I can see the future. Regarding the financial practitioners or professionals, I believe there is no doubt you need to go back and understand what is happening. You shouldn't start, as Morgan said, from the school. There are a lot of diplomas today happening that you can take it in Coursera or in Udemy. Very nice set of sessions that can unlock for you the ambiguity and know more about this. And it's better to know it within your context, how you will do the accounting for assets that are intangible assets that are already inside the blockchain. I believe the tooling, all the tooling for accounting, you need to access the blockchain to get the transactions. So there are a lot of interesting applications and work need to be done in that domain in order to make it more comprehensive and appealing to the people to grasp it.
Okay, perfect. Thank you so much, Mohammed. Naqib, please go ahead with your response.
Okay, so basically how DeFi is going to shape up. Obviously, I cannot give a very accurate reply because we are in a phase where people are still experimenting with a lot of innovations. But yes, the way the developments are taking place and the way people are enthusiastic about bringing all the financial products and financial offerings on the blockchain, obviously we can actually see this going up growing up in a considerable pace. I mean, if we just I think in the beginning of the presentation we discussed this, like the total value has gone up from 6 billion to 16 billion just in 5 months, and from 0 billion to 6 months it took 5 years or 4 years. 4 years. And remaining 7 billion to 10 billion was almost like in 5 months. So people are really being attracted to the benefits of this ecosystem. They are willing to risk their money, their time, even their reputation, because there are some projects that even turn out to be scams later on. But the people that get involved in this are not part of the overall thing. So people are even willing to risk their reputation just for the sake of innovation. But yes, these are like stepping stones where we actually move towards a more matured DeFi ecosystem. The mistakes that we learn from all of this are very costly mistakes. But yes, but the generation is not afraid of moving ahead. And regarding the problems that it solves, if the innovators and the economists both come together, because usually what I see that the traditional economists are actually against what might be going on. We also saw a video that is posted by Henry Aslimin, the crypto head of PwC. He interviewed some economist, I don't remember his name, and he was really against what is going on in the crypto ecosystem. I mean, he used really harsh words. So I mean, if the economists don't actually come together and guide the innovators who are actually trying to innovate in this system, the obviously, I mean, the innovations for sure it will happen, but it will not happen at the way it should be. So the seniors and the I mean the people from the financial sector and the people from the technology sector have to come together and devise products for the benefit of the society, real products, real DeFi ecosystem, just not like trading and earning 3000% APY. No, I mean, real financial systems and real products that can benefit the economy at large. And regarding the education and the and how the financial professionals should take care of this change is number one. Obviously, there's no doubt that everybody should upskill, should keep on learning. Like even all of us who are involved in this ecosystem, we are learning whatever is happening. There are very good podcasts that happen on a weekly basis, on a monthly basis. They should listen to, and there are newsletters and weekly updates that are published by global crypto influencers on LinkedIn. So these are basically certain ways how you can upskill yourself, or especially the financial professionals from the financial crime sector. For example, people dealing with AYC, KML, they need to be even more careful, and they need to be even more technologically literate to understand the logic behind how cryptocurrencies work and how they are traded and how they can be traced, how they can be analyzed. So these are the things. So more of the technology side has to come up along with the education side.
Okay, perfect. Thank you so much, Naqib. So now I would like to ask Asif, Brother Asif, your concluding remarks and also your final thoughts on it.
Thank you very much, Dr. Farooq. And I have listened to all the great speakers and Morgan, Muhammad Al-Rushdi and Muhammad Naqib, and they have highlighted so many things that when we are talking about the future of DeFi, the cryptocurrency promised to make the money and payment universally accessible to anyone, no matters where in the world. So the decentralized finance or the open finance movements take that promise steps further. Imagine a global, open alternative to every finance service you use today: saving, loans, insurance, or more accessible to everyone in the world with a smartphone or internet connection. So what DeFi is promising you is that without an intermediary, without any central control, these things are with it. And now what I foresee in, in 2-hour session and everything like that, we come up and summarize these things. One thing, to the future of DeFi and the timing of DeFi, how much we can implement, how fast these things implement, depends on the ecosystem. One thing, if the ecosystem is there, so its implementation will be faster. Second thing is that there is one more critical things which everybody is highlighted, is the issue of AML, KYC, that if we let go DeFi's and start working on decentralized finance, what happened about this AML and KYC? I will come back to my first thought, which I've been facing since 2018. I have been working on different things in blockchain. We are doing development, we are doing consulting and everything like that. What I come up in the solution is that this blockchain, DeFi, finance and technologies will work efficiently and transparently only and only if the identity is on blockchain. If we solve the problem of identity, and we will be solving, I personally think, 60% of the problem of blockchain, and it will become more smoother and more faster. And about the Naqib, as he's saying that finance and technology should come together, already they have come together. That's why we have fintech today, that they have joined hand. Basically, I'm a chartered accountant by profession. I'm running my auditing and consulting, and then we have started this fintech technology based company, that we know the future is in on technology. The finance is 100% dependent on technology, and with the transformation of technology, finance and financial activities are going to change and transform, which is the biggest example is now this cryptocurrencies, this DeFi, the triple entry accounting system. These are all the features. And now I will close my remarks that I personally thanks to everybody, the speakers and the moderator, and it was an excellent presentation and excellent, group discussion on that one. Thank you very much, Dr. Farooq.
Thank you so much. I would also like to thank all the panelists. Great presentation, great discussion. Thank you, guys. It's been a very much pleasure to have you on the panel and talking to you. And I have already started receiving feedback from the participants that it was a very good, informative piece of discussion. Thank you so much.
I want to add to one more thing is that we are thankful to our knowledge partners also who are helping in spreading this knowledge, which is free of cost. Our aim is that to create an ecosystem, awareness is the first step. When people are aware of the technology, they are aware of the processes, then only adaptability will be more acceptable. And we thanks to Alhamd Academy, we thanks to ICMA, Institute of Chartered Accountants of Cost and Management Accountant of Pakistan for their help in sharing this knowledge. Thank you.
Thank you so much. Jazakallahu khaira. Take care. Bye.
Thank you. Bye-bye.